All right, Lagos, it is 16 minutes gone past 5. You are tuned in to the Smooth Drive. And today on the marketplace, hey, it's going to be an interesting conversation because we'll be discussing the business of risk management and financial services. Well, talking about this, right? Have you ever been in that space where you're wondering? Well, don't wander too far because my guest today, in the person of Joshua Olupinla, he's a principal at Deep Risk Technologies. Well, his company provides risk management consultancy to financial institutions. We'll be giving insight as to, hey, it's a new business, what it is you think you need to know, and how you can improve on those services. But hey, good to have you and welcome, Joshua.
Yeah, thank you so much, Joy. Thank you. I'm happy to be here.
All right. Lagos, you can also be part of the conversation. You want to share your thoughts, you want to share your contributions. Well, WhatsApp is the platform 0911 999 0981 0911 All right, let's get into the conversation proper. Talking about risk management, basically, or the business of risk management. Can you break it down to us? Give us an overview of what it actually means.
Okay, Joy, thank you so much for the question. So, so typically, I like to think about it from extreme positions, right? I mean, when I want to understand something, I try to look at what is the worst case scenario, what is the best case scenario, as the case may be, right? So that helps me to appreciate the concept, right? So, take for instance, when we were in school, uh, friends of mine used to say that those who are in the accounting field, they would say that if pure water is sold at say 5,000 naira per sachet, that the
Right.
accountant would survive. That's an extreme scenario, right?
Okay.
Again, I would like to look at the other side to say, let's say for instance tomorrow, uh, the price that you buy Gary in the market, suddenly
Mhm.
you're not able to use that same amount of money to buy a private jet. How would you feel?
You say what?
So
I'll
those
be
are
living
extreme
La Vida
scenarios. Yeah.
like a lot of
Oh,
Nigerians.
really?
We'll
So
be cashing out. You say what?
it can happen, right? It can happen.
Huh?
Yeah, is it possible? Maybe extremely, impossible. But
Extremely impossible.
but it is not zero, right? It is not. So
Okay.
we had a case not quite long in Zimbabwe where you could, you could carry
Oh
a
yeah, you had
bundle,
to.
or you had like $10 trillion or ten
You'll be
trillion
hearing that amount
naira or
and you'll be
something.
wondering,
As
how is that
and there were
happening?
even cases in Venezuela where 10
Mm,
million Venezuelan currency, you couldn't use it to buy an egg or something. So those are extreme cases, but typically risk management is essentially the process of identifying an uncertainty is a deviation from normal, right? Or
okay.
deviation from your expectations. So, as a business owner, as a business entrepreneur, right, you have expectations that you have, outlined. Now, because you're not living in today, you're expecting it tomorrow. There is always an element of uncertainty that something can go wrong, right?
Okay.
So that act of expecting that something can go wrong, and if that thing happens, what do I do, right? Not just that something can go wrong, even something can go right as well, right? Maybe something can go extremely beyond what you initially planned,
I agree.
and those things can have unintended effects, right? So, uh, this moment is just to say that let me identify those things now, and
Hmm.
let me try to
Work.
assess them, right? And
Hmm.
let me try to see how I can manage them. Because a business owner wants something that he can predict. He wants predictability. He wants that when he goes to the
Right.
market, he sells for X amount of amount, he gets his profit, he gets out of that transaction, right? He doesn't want to go to the market and he finds something, shocking, and he now starts doing mathematics in his head. Some footballers currently, or some supporters of Nigerian football now are currently doing mathematics on how Nigeria is expected to qualify. So, so that's risk management essentially. You say, what if we
Okay.
beat this person?
Nice
What if we don't beat? What
analogy.
happens, right? So,
Right.
essentially, that is risk. I should say that risk is just not, again, what can go wrong, like I said, but also how to protect whatever position that you are holding, and how to also look at the opportunities that can arrive at those uncertainties that we have projected. Risk
Right.
management is really about the decisions that you take under that uncertainty, right? What are the decisions
Mhm.
that you take to help you to manage your position? Essentially, that's it. Individuals take they manage risks. Businesses as well manage risks. Thank you.
Okay. All right. So it is all about knowing how to manage your situation or manage the mm, yeah, situation is
Uncertainties,
uncertainties.
around your
Okay.
expectations. Yeah.
Mm, manage uncertainties. I think I'll go with that one. So now that we have an idea about that, I want to find out are insurance companies the main players when it actually comes to business of risk management, since we're known that they cover the unknown, so to speak? Are they the ones, are they the players in the space?
As expected. So typically, the insurance business says that when you have something that you don't want to happen to you, or that you fear that it might happen to you, come to
Right.
us. We help you. Come to us. We help to find a way around it so that you're able to manage it. So
Mm.
uh, the insurance business takes care of one tiny bit of risk management. After the entire risk management has you scoped it out. What do I mean? Like I said in my
Okay.
earlier definition, that risk management is identifying the risk. That portion of identifying the risk is not the insurance company that will do it for you. You do it yourself. To say
Mm.
that, take for instance, if I take my car out today, there is a possibility that I get into an accident, right? That is a possibility, and that is an uncertainty. I may not get to my destination, right? So, and if I get into an accident, my car may be written off, something like that. That's an extreme case scenario, right? So that is risk identification. Now,
Mm.
we're not going to risk assessment to say, okay, what is the extent, what's the worst that can happen? What kind of accident can I get into? Okay, so maybe if it's within my house, maybe within my area locality, maybe if I'm traveling to Ibadan or if I'm traveling to Abuja, maybe I'll be overspeeding and something will happen, right? So that's risk assessment. Then
Okay.
what then happens after I've assessed the risk? Then I have to now check four things basically. Do I take on that risk? Do I absorb it?
Mm-hmm.
Do I transfer that risk? Do
Mm-hmm.
I try to manage the risk,
Mm.
or
Okay.
do I totally avoid it to say I don't even want this risk? Right? Absorption would be that, damn it, whatever it is that's going to happen, I'm going to get to Abuja today in
Oh,
4 hours,
yes.
right? I'm taking it, right? Transfer would be that I'm still going to travel, but I'm going to involve an insurance company to insure my car,
Right.
right? So in the event that something happens, then they kind of get me another car. Do you get the idea? So those are the areas. So that part of fallback option is where the insurance guys come in, right?
Mm.
So they are also a part of a critical part of risk management ecosystem, but they are not the whole picture, right? Insurance deals with primarily risk transfer, like I said. When an organization or an individual cannot bear a potential loss, then they transfer it to the insurance company so that the insurance company can bear it. But again, the business of risk management is beyond just insurance. It stands long before that policy is written, because you have to identify, you have to assess and all. Let me just conclude by saying that I like to think I like to think about insurance this way, to say, well, insurance is like the safety net. It's like what
Okay.
catches you when you have done that thing. It's just like your
Mm.
brake when you are speeding. When there's no brake in the car, you won't even be
Mm-hmm.
able to drive the car, because once you start the car, you'll be able to stop, right? But risk management is the entire process of driving. It's the entire process of learning how to walk the tightrope of safety, right? So,
Okay.
because again, if you want to do business, there is no way you're taking risks, right? If you don't want to take risks, then it means you're not doing business, right? Essentially. So the
Mm.
act of doing that business means you're taking certain risks, and then you have to then think about how to ensure that you still get to your destination without suffering a lot of damages.
I like how you put it. You get to your destination without having to suffer so much loss or damage to either your vehicle
Exactly.
or even yourself. So, hey,
Exactly.
uh, in my head, I always thought, okay, so they were the major dealers or major people in this space, but it's good to know that there are other players in this field. Anyways, let's get
Mhm.
let's get into the
I mean,
conversation.
we can easily give instances of other players, right? I mean, take for
Right.
instance, your bank can also help you to manage risk, isn't it? I mean, there's a reason why you put your money in the bank. You didn't put it at
Mm,
home. You have 10 billion. You didn't leave it under your bed, right? You take it to the bank. You have managed that risk of theft, isn't it? By just,
hmm
taking your money to the bank. So that particular role that the bank is playing for you is also risk management, right?
mm,
Uh, and some other, external driver, you back it up in the cloud. You have managed the risk of maybe in the event that someone steals your laptop or something, right? So it's not just insurance
I get
companies,
what you
right?
mean.
Doing risk management
hmm
for you. Yeah, you are thinking
You're
about
already
whatever
protecting yourself
possibility that can
before.
happen, right? You're
Yes.
protecting yourself exactly.
That's well, some people are not so um averse to risk, so they will tell you, don't worry, I'll just put it in here, or keep it under. Let me not give out all those let me not give out all those expos that people to so that people anyone
Right.
who's listening and should not be doing that. Just make sure that you're protected. That's all I'm going to
Oh
say
my
for
God.
now. Anyways, let's get further into the
Mhm,
conversation. So, aside the insurance firms, right? What other financial services provide
mhm.
or offer financial instruments to customers?
Mm, mm. Okay, so like I mentioned earlier, right? Other financial companies, I mentioned my banks, I mentioned that your other providers like your investment firms that help you to manage, your investments and all, and they ensure that you just don't take unnecessary risks or calculated risks. Because again, what differentiates risk management from gambling would be that risk management involves a lot of thinking and calculations. Gambling, I just go there, I say Barcelona wins this person, and I move, you know, or I just do whatever it is. I mean, I'm just saying, right? But these guys, I mean, what they try to do is to ensure that they do their calculations and to say, look,
Right.
these are the chances that this is going to happen. So
Available.
let us err on the path of safety.
Caution.
So any other financial organizations. Take for instance, you also have your registrars companies that help you to manage your shares, right?
Ah,
Uh,
right,
in the
right.
event of maybe theft or maybe someone dies or whatever. Even we also have legal practitioners like trust companies that help you to manage your will. In the event those things happen to you. So I mean, we have a lot of them.
Mm,
Measuring on different areas of different specializations of whatever it is that can happen to maybe individuals or businesses.
okay. Hmm. All right, cool. That's see, like I said, I'm always open to learning and I like how this is taking its course. But we have a quick breather coming along. But before I get into before the breather, I just want to well, there's something I'll share or I'd like to get insight in on when we get back. We'll be talking a bit about Nigeria's exchange rate and how it what its role has been like, where risk management is involved. But let's take our breather. When we get back in, we'll talk about that. Lagos, you don't want to move a muscle. You want to stay here on Smooth 98.1 because on Marketplace, it's great conversations. 8.1. Absolutely no one does it better. Okay, quick one, and we'll be back in just under a minute. In the cooking game, you need a winning game plan.
just talking about your fresh ingredients, utensils, or cooking skills. I'm talking about your choice of seasoning. My game plan is incomplete without Maggie chicken flavor. Made with a flavorful formation of onions, celery, turmeric, it's my game changer. Elevate the taste of your everyday dishes with delicious rich chicken flavor. Oh yeah, let's go. New Maggie chicken flavor, my game changer. Accessible and full.
All right, Lagos, it is 32 minutes gone past 5. You are tuned in to Marketplace here in Smooth 98.1. And today on the Marketplace, we're talking a bit about risk management or the business of it. And hey, have you been in that space? Is there something you need insight on? Well, my guest in the person of Joshua Olupinla, he is the principal at Deep Risk Technologies. It is a company that provides risk management consultancy to financial institutions. He's been giving great insights. I'm breaking it down as simple as possible. So talking about risk, really, before I get into, I know I'd asked the question earlier where, you know, Nigeria's exchange rates. Before we get into that, I want to know what's your thought on fine print in contractual agreements, because there's always the caveat there to read the fine print, but it's for the love of everything holy. Why is it so long and so tiny? It's sometimes relegated to the background, and then customers are said to pay attention to the fine print. Why is it that it can be broken down for us to understand? Why do we have to go through all that just to get the thoughts?
Uh, so I mean, this particular question will take me into the legal space. For the
Okay.
life of me, I do not know why they do that. I really do not know why they do that. Right? I mean, I've had to also sign up on different applications or different contracts where it's just they're just too much, and they're very tiny, like as if they don't want you to read them. But I mean, absolutely, consumers should pay serious attention to the fine print, because that is often where the real story is being told, usually very big, right? I mean, I'm also guilty of signing some contracts maybe in the past where I just don't read them, especially all those Facebook or Twitter agreements. I just say just check the box, and
Okay.
the fine print, they spell out your rights, your obligations, exclusions, and even conditions that govern you using that application, or even a contract, if it's a bank contract that you have, maybe a loan contract or something like that,
Mm.
or an insurance policy, or an investment, or even a phone subscription is signed, can be very, very catastrophic. So if I'm going to look at it, I look at it from the position of that adage that says that what you don't read today might read you tomorrow, so that people will be
Oh,
learning lessons from you, right? So please
no, I
try
don't
to
want to
read
be
the fine
quoting
print.
someone.
Please
I
try
don't
to
want
read
to
the fine
be quoting you.
print.
Right. Right.
Exactly. And I would also say that financial institutions too should also try to make these things, more transparent, more clear. All
I
these
agree.
technical, big languages, or grammar. Just try to, make them consumer friendly, so that people, if they read them, they can understand.
Okay. Uh, that That I actually like. So please help us to help you. Because if we are not helping your consumers or customers, uh, we might just be in trouble. So now let's talk about the Nigeria's exchange rate. What what role did it play in risk management assessments for, or what role does it even play where financial firms and products are concerned?
Okay, so I mean that's the elephant in the room. Typically, almost every business is affected by exchange rate volatility, right?
Right,
In recent times, we've had companies as big as Cadbury, NTN declaring
right.
losses, millions, hundreds of millions in losses, right? Companies that have been that has been making profit for aeons, right?
Mm,
And if you look at the financials, what you eventually see is that they're generally due to exchange rate volatility. So, typically, from a risk management perspective, exchange rate volatility directly affects financial performance, asset valuations, as well as even consumer confidence. Like I told you, the investor or the entrepreneur wants certainty. He doesn't want uncertainty. He doesn't want that tomorrow. He doesn't know what's going to happen. He wants it that he can, at least to a fair degree, predict what's going to happen tomorrow. Because if you cannot predict what's going to happen tomorrow, then you start having all these scarcities, like you have fuel scarcity. You don't know whether prices are going to go up or going to go down. So, so the gas stations, they just shut down their nozzles or whatever. So you want to be able to predict so that you can set prices that will benefit both you and, of course, that will also be fair to the consumers. But in recent times, Nigeria's exchange rate has not has been very volatile. Although in the last 2 quarters, we've had relative stability, which has now translated into a better working environment for entrepreneurs, especially importers as well as exporters, right? So it directly affects performance of businesses, right? Again, central bank's policy changes,
mhm.
market reforms, and as well as the liquidity challenges they have also made these scenarios very, very tricky, right? Because don't forget, they control, or they have a very big impact on what happens in our exchange rate market. So for me, exchange rate is a strategic business concern. It has moved beyond even market risk, in my opinion.
Okay.
I didn't say, maybe I should just restate that risks management, we have different kinds of risk. We have market risk, that's for the market, which exchange rate is a part of.
Right,
Credit risk,
right.
that's a risk that someone doesn't pay you back whatever money you are giving them. Liquidity risk, the risk that you cannot easily convert whatever asset that you have into cash. Maybe you have a house and you need 200,000 naira, but you have a house worth of 10 billion, but you can't just easily convert that 10 billion house to cash. So you're still broke anyway because you just have a house, you don't have money. you know, then there's also
Oh
operational
my days.
risk, right? That have to do with people. You have a number of staff, and you didn't plan that they're going to half of them is going to jackpot before the end of the year. And you plan that before the end of the year you're going to make X profit, but I mean people just leave. So actually, it is part of that market risk. But for me, it has moved to strategic business concern that every business, every business should look at. Finally, currency stability is a silent foundation of even the financial system, right? If Nigeria's currency is pretty much stable, you expect that businesses would accelerate. But if exchange rate is unpredictable, every other form of risk, even credit risk, liquidity, market risk, becomes magnified, sort of. Yeah, it becomes magnified. Yeah, that's it. Thank you.
Okay. I like how you put it. Everything comes magnified. But um here's a question that's on my mind. And this has to do with the mortgage sector of Nigeria and real estates and all that. What kind of risks are there? And is it mostly around the risk of default that we have mortgages? Because I don't know. When it comes to real estate in Nigeria, it just seems like it's tricky by the day. But hey, I like your thoughts on that.
Okay, so the thing about real estate in Nigeria is that I mean is plagued with different major risks. One of the
Mm,
biggest risks that we have is because mortgage is a long-term instrument. Long-term in the sense that you get a loan today, you plan to pay in 15, 20, 30 years, right? Now, hardly do people go to banks to deposit their money and keep it for 20, 30 years. People want to take their money out tomorrow. So the bank is doing two things at the same time. The bank is trying to calculate whether the money that Joy has deposited with them is going to stay to 30 years. Because don't forget, the bank's business is to collect the same money that they have collected from Joy and give it out to,
I give it someone else.
as a loan, right? So
Mm,
imagine the bank is giving out a loan at 30 years, and John is
mhm,
coming tomorrow and saying, give me my money. Where is the bank going to get the money from? So we have that asset and liability mismatch. One. Another thing is that
mm,
because we are in a high inflationary, or would I say highly volatile economy in Nigeria,
mhm,
interest rate is not generally stable. I mean, in like about 10 years ago, interest rate
mm.
was hovering around 20, 18, 19%. Now we are having about 35%, right? When you imagine you have a mortgage and you are paying, let me say, 100,000 naira a month, all of a sudden, because of maybe change in government or change in administration, you
Right.
start paying double of that, or three
Oh,
times that, because of
oh
change
my
in
days. Some
interest
people are
rates,
paying three
right? So
times that.
it's difficult for exactly. It's there for you to maintain the same interest rate or relative interest rate for a long period of time.
Right.
So because of that, it increases the borrowing cost for real estate investors.
Okay.
And because of that, it's difficult for them to kind of manage those long-term risks. So we have a short funding, a shortfall in funding of mortgages generally. That's why we don't generally have an abundance of houses to maybe
Housing.
buy yes, on the Nigerian market, or and the ones that you have, you just that they are, you see the prices and you want to cry. So that's it. Another risk that plagues the real estate industry is liquidity risk, right? Because
Mm.
again, when you invest, you just want to also pick up, get money from there, and do another investment so they can turn the money over. But in Nigeria market today, you can list a house today and you may not be able to sell the house in like 6 months. In that 6 months, what's the investor going to be doing? The investor is just going to be hoping and praying that money comes, because he needs to pay salaries and do other stuff, right?
Ah,
So
we
those are
have
the
to
issues. Again, we
survive.
also have regular, yeah, we also have risk, right? And what do I mean by
Right.
that? Before you get government approvals to build houses or
Approvals.
build real estate and all those things,
Hmm.
and even if you get the approvals, in certain cases, you want to be sure that you have gotten the right approval, because government can come tomorrow and tell you maybe you've
That land.
trespassed or something.
Mm-hmm.
So you want to be very, very careful of that. So it's a risky business, and that is why investors
Right.
have now priced that risk into the prices of real mortgages, and that's why,
We
or real
are
estate general. That's why you can see rent
has
costs soaring
skyrocketed.
beyond normal levels, as well as house prices.
Mm. Thank you so much for that explanation. Now, I'm sure that Lagos and part of the world listening now understand why people are paying through their nostril just to pay for house rent. But really, before I let you go, here's the question that is on my mind. More is Nigeria more or less about the risk that you can bear, especially as a business compared to her peers?
What I'm going to say to that is that yeah, we can say that it's risky to do business in Nigeria, right? And again, it's risky to do any kind of business anywhere in the world. There's
Anywhere. Right.
anywhere in the world. Yeah, compared to our peers, yeah, but the good news is this. The good news is that Nigerians are also very, very resilient. In fact, the
I think that
economy
is
of
in our
Nigeria is
DNA
extremely
right now.
resilient. Exactly. The economy in Nigeria is very, very resilient. So it's not just about the kind of risk that you face when you do business generally. It's also
Mm,
about the quality of your response towards that risk,
okay.
right? Successful business owners in Nigeria, I mean, the typical names that we kind of mentioned these days, the likes of Dangote and the rest. They know that they are doing business in an environment that is
interesting
interesting,
environment,
right? But they're also prepared to be resilient.
Okay.
Yes, in an interesting way. So, and they're also prepared that, so that, because again, risk and reward generally go pari passu. The higher the risk, the higher the reward, right? So if you do your business in a high, risk environment, commonsensically, you know that there's a high, chance that you make good money from that business. So for me, it's about the resilience of the entrepreneurs that are going to do business in Nigeria. You have a lot of things to deal with. You have a lot, light issues, you have power transition and all that. Again, for manufacturing businesses, they have supply chain issues. For tech companies, they have data privacy issues. For banks, you have default issues. People don't want to pay their loans. Right? But you have chosen to do business in Nigeria. You have to be resilient.
Okay. So you have to tighten your belt and everything tightable. Anyway, thank you so much, Joshua. It's been an interesting session today. However, for those who are tuned in, want to get more insight where risk management for companies or or businesses, how can I reach out to you on your social media handles?
Okay. For now, I'm very active on LinkedIn, so you can connect with me on LinkedIn, Joshua Olupinla. You can connect with me on LinkedIn. Yeah, that's it.
Oh, all right. Well, that's the much you can take today, Lagos. Thank you so much for sitting through and learning all the insights where risk management is concerned. So much more lined up for your listening pleasure. For you, like I said, I wouldn't move a muscle. Stay glued to your radio. Smooth 98.1. And that was an interesting one. Thank you so much.
Oh, thank you, Joy. Are we still live?